This Swanson Reed presentation provides information regarding R&D tax incentive taxpayer alerts published by the ATO in December 2023. Taxpayer alerts are specific publications which provide a summary of ATO concerns about new or emerging high-risk tax arrangements which will likely be a focus of future ATO compliance activity. Taxpayer alerts are intended to be high-impact publications which the ATO use to bring high attention to affected taxpayers and arrangements. Each taxpayer alert describes an arrangement, ATO concerns, and what the ATO are currently doing about the arrangement. Taxpayer alerts do not provide the ATO's view, but will often state if the ATO expects to issue advice or guidance about the arrangement following the taxpayer alert. Taxpayers that have affairs covered by ATO alerts should consider whether they may need to take action to adjust their affairs, including making a potential disclosure to the ATO. The ATO had previously issued multiple taxpayer alerts for issues impacting the R&D tax incentive in February 2017 regarding concerns around R&D claims for software development, ordinary business activities, and other issues. These 2017 alerts marked the commencement of a period of heightened compliance activity by the regulators surrounding R&D tax incentive claims. The ATO issued two new R&D tax incentive specific taxpayer alerts on 14 December 2023. One taxpayer alert concerning R&D activities delivered by associate entities will be the focus of this presentation. Another publication concerning R&D activities conducted overseas for foreign-related entities was also the subject of a taxpayer alert on the same day. It is expected that the 2023 taxpayer alerts may also mark the commencement of increased compliance activities by the ATO and Oz industry surrounding the R&D tax incentive. The December 2023 taxpayer alert regarding R&D activities delivered by associate entities was titled TA 2023/4 Research and Development Activities Delivered by Associate Entities. The ATO have noted that they are currently reviewing claims made by R&D entities for expenditure incurred under an agreement with an associate entity, i.e. an associate entity service provider, who itself conducts the R&D activities. The ATO are concerned with arrangements that incorrectly position the claimed R&D entity as having incurred and/or paid the relevant R&D expenditure under an agreement with an associate service provider, or have the effect of obtaining for the R&D entity a tax offset for expenditure on R&D activities purportedly conducted for the R&D entity's own benefit, but which are instead in substance being conducted for the associate service provider. The alert notes that the associate service provider is usually an entity that has historically conducted the group's trading and research activities. The service provider, however, is not itself an entity that would be eligible to claim an R&D tax offset were it to conduct the activities for its own benefit, or if it were eligible, would only be entitled to a lower benefit under the R&D tax incentive. The alert may apply to combined concerns around the scope of entities that are eligible R&D entities under Section 355.35 of the 97 Tax Act, which broadly indicates that an eligible entity must be a company and not a trust, partnership, or sole trader. The on-own behalf rules derived from Section 355.210 of the 97 Tax Act, which can be interpreted to mean that the R&D activity must be conducted for the R&D entity, in that the claiming entity should own the relevant IP and conduct the activity at its own financial risk. And also the associate entity R&D expenditure payment rules under Section 355 5.205 of the 97 Tax Act. It might be inferred that the ATO are targeting arrangements where a group is initially trading through and conducting R&D activity via an ineligible entity, such as a trust, but where the R&D entity is subsequently positioned within the structure to lodge R&D claims, whilst the ineligible entity continues to trade and conduct R&D activities. For example, the ATO may be concerned that the entity for whom the R&D activity is being conducted is an eligible entity such as a trust, and that a contrived arrangement was put in place resulting in a company notionally reporting R&D expenditure, which was in substance for the associated trust entity. The trust entity is not able to lodge its own R&D claims, but a contrived arrangement in the mentioned example was put in place to facilitate a claim being made by a company. Such arrangements may also include contrived measures attempting to comply with the associate entity payment rules, such as via the use of set-offs. TA 2023/4 notes that arrangements of concern are commonly structured as follows. The associate entity service provider may have been in existence prior to lodgement of R&D claims and may have historically conducted the group's trading and R&D activities, but may be an ineligible R&D entity, such as a trust. The group may incorporate a new entity or repurpose an existing non-trading company within the group to designate as its R&D entity. The associate entity service provider may then be engaged to conduct R&D activities under a service agreement with the R&D entity. The associate entity service provider would fund the R&D activities being conducted before purportedly invoicing the R&D entity a service fee or recharging the amount for having conducted the R&D activities. However, in substance and effect, the associate entity service provider is the entity for whom the R&D activities are conducted for, in that it controls the strategic decisions regarding the R&D activities and has primary right to commercially exploit the IP from the R&D, such as by trading with or selling products that apply the developed IP. The R&D entity lodging the claim may conduct limited or no other activity other than the R&D specific arrangements under the service agreement entered into. In addition, satisfaction of the service arrangements may occur via transactions involving loans or set-off arrangements put in place involving transactions for license agreements, service fees, or intra-group sales. In addition, the claiming R&D entity may have no historical employees or technical experience, no financial resources capable of realising in order to service any indebtedness to the associate entity service provider. These may apply where a group has always operated via a trust, but then incorporates a company to invoice R&D expenditure to, but where the R&D entity exists only as a notional entity, whilst the business and R&D operations continue to be conducted by and incurred by the trust, such as where the trust continues to employ all R&D staff and make sales to the group's customers. In broad terms, the ATO are concerned with arrangements between the service provider and the R&D entity that, even if legally documented in writing, are inconsistent with the actual commercial substance of the group's operations. Arrangements of concern noted within the alert include those where there are two or more related entities, transaction processes whereby satisfaction of the R&D entity's service payment obligations to the associate service provider occurs by way of share issue in the R&D entity's equity, service fee payment obligations that may be met through various payment options in rapid succession, through a circular flow of funds, such as a round-robin type payment, or longer-term funding purporting to be general working capital or other contrived set-off arrangements. Based on identified concerns, entitlement to the R&D tax incentive may be compromised legally due to a number of factors. Firstly, obligations to pay an associate R&D service provider's fees may be in some cases impacted by future events or contingencies, which would mean that it cannot be concluded that the R&D entity is definitely committed to its obligation to pay the expenditure and therefore did not validly incur the relevant R&D expenditure, which is a condition for claiming a notional tax deduction. Also, where R&D expenditure is incurred, it may, in some cases, not effectively be paid to suffice the associate entity payment rules. The R&D activities may also not be conducted for the R&D entity or may be conducted for the associate entity service provider, which may be an ineligible R&D entity such as a trust. In instances where an associate R&D service provider's fees may qualify as R&D expenditure, issues may arise due to applications of the reduction to the market value of R&D activities being conducted by the service provider, or any eligible expenditure amount might be reduced to reflect any markup on the expenditure incurred by the service entity and charged to the R&D entity under the agreement. Issues may also arise from application of the at-risk integrity rule. The ATO also note in the alert that even if an arrangement is effective under the substantive provisions, if objectively viewed that one or more parties to the arrangement entered into or carried out the arrangement for the purpose of obtaining a tax offset, the general anti-avoidant provisions in Part 4A may apply to cancel a claimed R&D tax offset. Key takeaways to be mindful of following the ATO's publication of TA 2023/4 include that companies claiming the R&D tax incentive are only of interest to the ATO in the context of this specific taxpayer alert, where they are claiming R&D expenditure service fees from an associate of the R&D entity. Where an R&D entity conducts all R&D activities directly and its R&D employees and suppliers are all entities who are not associates of the R&D entity for tax purposes, then Taxpayer Alert TA 2023/4 is not directly applicable. Where companies claiming the R&D tax incentive are including within their claims the cost of R&D expenditure service fees from an associate, they should review their affairs against the points in TA 2023/4, specifically to ensure that the R&D entity can be shown as the entity who the R&D activities are conducted for, to ensure that the R&D entity can show that it is sufficing the associate R&D entity payment rules in accordance with the ATO guidelines and in a non-contrived manner, and to ensure compliance with the additional integrity rules around market value and reductions to reflect markups. Some particular warning signs based on risk factors identified in the alert may include where another entity within the group that is not an eligible R&D entity, such as a trust, may be substantively conducting the R&D activities or trading with the IP generated from the group's R&D. Structures where an R&D entity has no commercial means to fund the R&D activity, including sufficing the associate entity R&D payment rules via complex or contrived means, such as via set-off or round-robin payments. Issuing of shares by the R&D entities to suffice payment of its R&D expenditure, and also inflated markups upon associate R&D entity service fees. Where R&D entities may feel that TA 2023/4 applies to them, they should closely review their affairs and seek advice. They may also consider making a voluntary disclosure to the ATO. The ATO note within the alert that their next steps on the matter may include engaging with taxpayers who have entered into or are considering entering into arrangements of the type that are flagged within the alert, subjecting taxpayers and advisors who enter into these types of arrangements to increased scrutiny, and also developing further website guidance on specific technical matters relevant to the content within the alert. That concludes our update on ATO Taxpayer Alert TA 2023/4. Please see the ATO or Swanson Reed website for additional information, or alternatively, please contact our office if you have any questions. Thank you for listening to this presentation.